Hey guys, Adam Rhodes, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy Podcast, and today we're going to talk trigger leads, rates, and what's happening in the market in regards to where interest rates are headed and what's going to happen in the near future. And hopefully we have some good news for you. May not be immediate, but something that's good is coming down the pike, I think. Anyways, I have my co-host Gracie, my son's service dog. I'm keeping her in check here. She's super fixated on these treats right now, so I'll give you one. Say hi. Say hi, everybody. Anyways, let's hit the trigger leads, right? So trigger leads, a lot of people have been talking about it, been announcing it on Facebook, how it's gone, and it's true, they are gone. So what is a trigger lead? Trigger leads back in the day, they got real bad during COVID and continued on as such into 22, into just last month. In a nutshell, you're sitting in my office, we're doing a credit check. Once I pull that credit, what happens is the credit bureaus, TransUnion, Equifax, Experian, they're selling that information and data to any kind of lender that wants to buy leads from them, in essence. And they know a mortgage company pulled that credit report, so in that particular case, they're selling it to other mortgage lenders. And it's a bottom feed situation. So these lenders are buying these leads from the credit bureaus, and then they blast your client within, 5 minutes usually. And, we've had cases where people were getting 50 and 60 calls over the next couple of days after a credit check. And it was quite a pain for the client, quite a pain for the lender, right? Because no one takes into account the cost to acquire a client. And then they just come in, swoop in, and try to steal them. Sometimes they would impersonate that they were working for us or whatever lender pulled your credit. And sometimes they were honest, and, sometimes they tried to lead people into teaser rates and stuff like that just to get their attention. It was quite a nightmare for a lot of clientele, lenders that weren't doing the trigger leads and getting clients stolen from them and whatnot. But nonetheless, that is officially gone. We were in D.C. last year in April of 25 pushing that legislation. This legislation is not new. It's been around for years, more than 6 years actually. It just could never get attached to anything to get over the finish line. In April last year, we were really pushing it really hard during national advocacy with the national MBA, and it got over the finish line, in August or something like that. Then there had some time for it going into effect, but effective March 5th, it is officially gone. Now, this is not to say that if you already had a relationship with a lender and they repulled your credit, or someone else pulled your credit, that originating lender could get notified just because they actually have a relationship with you already. But the concept of just random lenders out there buying leads from the credit bureaus, that is gone. Even if you've never heard of that company, they're gone if they don't have a relationship with you. So that's good news. Good news. It'll help reduce some of the headaches and the stress out there when buying a house. And that's good. Anyways, rates. So let's talk about that. We got another Fed meeting coming up in about a week or so. Good news, bad news. Bad news is most likely not going to do a rate cut. So rates were looking real strong over the last couple of weeks until the Iran conflict kind of spiked some stuff. Oil futures went up. There's still no idea exactly where oil prices will head. It just kind of depends on the Strait of Hormuz issue. They're looking at unleashing some of the reserves to help stave off price increases. But we're going to kind of keep an eye on that, see where oil futures are going to go and the instability in the market right now. But I know the Trump administration has been really pushing for another rate cut, kind of like what he was doing all of last year, which fell on deaf ears at the Fed. And it still is. I mean, they're urging a rate cut prior to the actual Fed meeting. But it looks like the outlook from the Fed chair as well as the committee is they're trying not to take this approach of let's talk Fed cut every meeting, right? That expectation has led to some volatility in the market rates anyways, because anytime there's some talk of potential of a rate cut, right, our market adjusts for it. So we might have a better price today. And then if they don't cut the Fed, or the Fed doesn't cut the rate at the meeting, we might see a rate increase because we reacted to news weeks ahead of time. So they're trying to push a little bit of a different narrative to make sure it takes a little bit of volatility out of the market. But expectations are rates will not be cut in the March Fed meeting, and a lot of it's just energy prices is huge. The labor market is based off statistics specifically. They just kind of stabilized in other words, based off the Labor Department memo that they had sent out about a week ago. And they're just trying to slowly decrease, I think, but there's not enough indicators for them to do a cut right now. But I will say long term, this is the good news. Long term, the expectation is they do expect 2 to 3 rate cuts throughout 2026. So again, I don't like to quote specific rates, but in generality, with solid credit, government lending rates, they're in the upper 5s at par. Conventional rates, they had snuck into that upper 5 range for a hot second prior to the Iran conflict, but now are back into that low 6 range, that 6 1/8 to 6 1/2, 6.65. It just kind of depends on credit profile, down payment, stuff like that. But just to give you an idea, still rates significantly better than what they were a year ago when they were in the 7s and 7.5 range. So we are better off now still, and hopefully the trends are still going to be going down over the next 12 months. So some good news. The spring market is here. There's a lot more listings hitting. There's a lot more activity. So that's good news. There's a little bit more supply out there. And we've noticed the dwell time on market. You still with me? Crazy? The dwell time on market is a little bit longer than what we obviously would have saw in COVID, the 24-hour takes, the 48-hour off markets. But I will say this, if that house is priced right and you're watching this and you're a buyer, that house is priced right and it's in the right area with the correct updates, they are still flying within a couple of days. So don't sit back on your laurels here. You got to get out there. You see a house that you like, go check it out and be prepared to pull the trigger on that offer because other people are doing it right now. We just saw a couple more over the ass, like a significant over the ass, because it was priced correctly, great size, it had a lot of potential. So you got to be ready for that. That's not going to happen on every house, of course. There is a little bit longer dwell time, but be prepared. Be prepared. Speak to your lender. Get your pre-approval. Get your documents in. Okay, let's make sure everything's solid. That way, when you pull the trigger on that offer, you can feel pretty confident that you're not going to have any issues. We do have an update. You want that one? Don't stare at it. You can have it. You want it? You want it? There you go. Anyways, quick update. You don't like that one? What's going on? Eat it. You want the other ones? That's fine. Picky. Unbelievable. You're like a kid. Does it have to be a chicken nugget? Jeez. Anyways, we just got done with the Ohio Mortgage Bankers Future Leaders Program. Had a record number. It was fantastic. Had about 18 speakers, CEOs, owners, coaches all over the country that donated their time and their expertise in any particular topic we asked them to present on. It was great. And then this past week on Wednesday, we had our day at the State House. So that's our opportunity to take a lot of the people, the future leaders, have never done this before, as well as some veterans that have been there multiple times. We go and we set meetings. We talk to legislators about all the topics of the day. I specifically, I kind of talked too much, I think, but specifically focused in on property tax reform, what's going on, the likelihood of eradication of property taxes altogether, which is unlikely since there's a $24 billion shortfall. They're trying to figure that out. The people that introduced eradicating property taxes didn't even have a plan to fill the $24 billion gap. That's kind of a problem. So they're working on some solutions. We'll see. Not banking on that to happen, of course, but we also spoke about House Bill 58, which I think is an important one. There's actually something that hits home here that we saved a client's home, but the bill itself is to prevent tax liens against seniors, against their home, which is a big deal. And then we also talked about trying to figure out some of the conversations that are going on around these utility bill issues. AES, for example, other electric company providers also, bills have tripled. It's insanity. And there's a utility bill assistance package that's trying to go through, but specifically focusing on lower income. And I brought that discussion up. Hey, it's not just people under the poverty limit in the U.S. or in the state of Ohio, but this is a problem across the board. Even people with healthy finances, if your bill triples, goes from $300 a month to damn near $1,000, that's not sustainable. So we're trying to spur some more conversations with our legislators at the State House to make sure something can be done about this. So I did want to inform you, those are the conversations we've been having. Insurance regulations, a lot of other things going on to make sure that we're trying to keep housing affordable as much as possible. We know, and if you're watching this, there's always so much a government agency can do in regards to the affordability crisis. The only thing they can do, which I brought up, property tax legislation to assist in keeping people in their homes and not getting jacked up on property taxes, as well as staving off the constant increases causing an affordability crisis for new home buyers going into the market. Insurance regulations, some of the problems that's been causing with the increases in insurance, and the other thing, assisting new construction. Now, again, government agencies, they might be able to sponsor areas or help with areas on large apartment complexes, but I'm talking about single-family homes, even multifamily homes, trying to find ways and work with local counties and municipalities in order to reduce the expenses or the impact fees, you could say, on new developments in the area. We're still 4 million housing starts short in the U.S. to kind of break even on this equilibrium and this need for housing. And so that's something a government agency can help with. Again, they can't fix the price points, but things like that, pushing the market into more new construction to help bring up the supply and level out the playing field a little bit could naturally bring down prices slightly. Nothing huge, maybe 5%, but something that we discussed. So we at Western Ohio Mortgage are here. We got your back. We're doing everything we can to assist in the affordability crisis in the state of Ohio. So if you guys have any questions, holler at us. All my information is at the bottom of the screen along your banner. But remember, subscribe to YouTube. Check us out on Spotify and Apple Podcasts. And we'll see you all next week.